Hey guys, welcome to my channel and welcome to another video. In today's video, I'm going to be discussing how to put together a stock investment portfolio made up entirely of 4 Vanguard ETFs. Now, before we get started with discussing the 4 ETFs that will make up this stock investment portfolio, I do want to point out that this is not meant to be stock investment advice. And I would encourage you to research any stocks or investments that you may make. You want to make sure that you're researching those before you purchase them. An ETF generally tracks a specific index, such as the NASDAQ 100 or the S&P 500 index. Investing in ETFs allow you to buy a large basket of stocks, which can help provide diversification and is helpful in safeguarding your portfolio against market volatility. This portfolio, made up of 4 ETFs, is very simple to put together and it's very simple to maintain on a monthly basis. So what you're going to want to do is you're going to want to set aside an amount that you want to invest every month in the market. You'll just decide how much that you would like to put in each ETF every month. You can do 25% in each ETF. You can do 10% in one ETF, 30% in another. So the mix is going to be completely up to you, and it will be based on your investing habits. So the first ETF in our portfolio is Vanguard Information Technology ETF, VGT. VGT tracks a broad index of companies in the information technology sector, which the company considers to be the following 3 areas: software, consulting, and hardware. As a result, this fund tracks some of the most crucial companies in the technology sector across a wide range of market cap levels. The fund focuses entirely on U.S. stocks and is relatively top heavy. 3 securities make up 25% of the fund. 54% of the assets go to the top 10, even though the fund holds over 425 securities in total. The fund has a 0.10 expense ratio, and its biggest holdings are Apple, Microsoft, Nvidia, Visa, and MasterCard. At the time of this video, VGT currently has a year-to-date performance of 20.96%, a 1-year performance of 15.22%, and a 5-year return of 17.23%. Technology is one of the sectors that I truly believe in, and one that I think has room for tremendous growth to the upside over the next 5, 10, and 15 years, making VGT a great fit for this 4 ETF portfolio. Next up on the list is Vanguard FTSE Emerging Markets ETF, or VWO. VWO is one of the largest ETFs in the world, having been embraced by investors as an efficient way to establish exposure to emerging markets. VWO's largest holdings include Taiwan Semiconductor, Tencent Holding, and Alibaba Group. VWO performance year-to-date is positive 1.69%. Over the last year, it comes in at 1.60. 3 years, it comes in at 6.05%. While those returns are not spectacular, I do think there is a great opportunity investing in emerging markets around the world who have so much room to grow their economy. The third ETF on the list is Vanguard Total Stock Market ETF, VTI. This ETF offers broad exposure to the U.S. equity market, investing in thousands of different securities across all sectors. That makes VTI an appealing option for investors looking to simplify their portfolio and minimize rebalancing obligations, as this fund can serve as a core holding of any long-term portfolio. VTI comes in with a very low expense ratio of 0.03%, and its top holdings include Apple, Microsoft, NVIDIA, Google, and Tesla. VTI has a year-to-date return of 7.24%, a one-year daily return of 6.18%, and a three-year daily total return of 13.99%, making this an outstanding ETF to add to your portfolio. And the fourth ETF that we'll be adding to our portfolio is Vanguard S&P 500 ETF, VOO. This ETF tracks the S&P 500 index, one of the most famous benchmarks in the world, and one that tracks some of America's largest companies. You can think of VOO as a play on mega and large cap stocks in the American market. These securities are usually known as blue chips and are some of the most famous and profitable companies in the country, including well-known names such as ExxonMobil, Apple, IBM, and GE. VOO has an extremely low expense ratio of 0.03%, and its top holdings include Apple, Microsoft, Amazon, and Berkshire Hathaway. As of today, VOO has a year-to-date daily total return of 8.07%, a one-year daily return of 6.68%, and a three-year daily return of 14.62%, making this my number one stock. Not only this portfolio, but all of the portfolios that I have across the multiple brokerage accounts that I have open that I invest in. Okay guys, that's it. 4 ETFs that you could add to a stock investment portfolio and invest in every month in order to build wealth. Investing in ETFs allows you to simplify your investment portfolio and allows you to invest in a broad range of stocks across multiple sectors and industries, while simultaneously providing some protection against market volatility. If you got some value from this video, I'd appreciate a like and subscribe, and comment down below what you think of my simple 4 ETF portfolio. Appreciate the time, and I'll see you in the next video.